Well, the UK's Overseas Development Institute will on Tuesday release a new document that looks at Nigeria's record of economic development and policies to date, and also look at strategies for economic transformation efforts. The new paper, titled Supporting Economic Transformation in Nigeria, was written by Nigerian and international experts that draw on global experience from large developing countries that have managed to change the structure of their economies. In a pre-event release, the Overseas Development Institute states that while Nigeria has so far experienced slow economic transformation and low quality growth, business as usual is not going to generate the large increase in productive employment that the country needs. The new document also states that Nigeria has the opportunity to promote a number of carefully selected projects that demonstrate the progress in export-oriented transformation can be made, contributing to a shared vision of change. And let's look at the interest rate story in the United States. An interest rate hike seems more likely as the June 15 U.S. Federal Open Markets Committee is set to take place. In a conversation with Stephen Kalajian of the Kalajian Report, VOA Channels television business correspondent for VOA Channels television correspondent Jill Malandrino had this conversation and discussed the timing of the rate hike announced last week by Janet Yellen and whether it is the right time to do so.
June has finally arrived, and the biggest question among traders is, will we get a rate hike following the FOMC meeting? Do you think it's time for Yellen to pull the trigger on this?
I don't think it's time, but I think they're going to. If I pretty much take a step back, I think it's more 50-50 kind of that they're going to raise interest rates. I think they have to pretty much stay the course in their last comments that they made in the last meeting, and pretty much when they said that they were going to take 2 interest rate hikes off the table for 2016. I don't see the data really warranting it, but I think that they're gonna move because more or less I think it's a matter of just helping the other central banks around the world bring their currencies down and let our dollar gain some strength here.
It's just so ironic because all we've heard about is the Fed is data dependent, and now they're more dependent on their credibility versus the data that actually supports an interest rate hike. So explain to us, if we were to get this hike, what would the impact be on the markets? Do you think we would sell off on it, or are traders just so used to hearing about the rhetoric at this point?
You know, they've been talking about raising interest rates since December of 2015. Mm-hmm. So we saw the decline in January, and then we saw the bounce back. I think now it's really much priced into the market, more or less. But not to say that there won't be some more volatility. I think you have to watch what they say after, if they do raise rates in June. What's the outcome after that? Are they going to then continue to say they're going to be looking to raise rates even more, or are they just going to say one and done? And then I think then you'll have a positive result with the equity market.
Right, because I can understand that finally hiking rates will take that uncertainty out of it. But what if data continues to decline and then it wasn't the right move?
Well, again, as I've been saying, I respectfully disagree. I don't think they should be raising interest rates when you have a 0.5% GDP number in the first quarter of 2016. So the thing really is that I think the Federal Reserve right now is wearing many hats. One, they're trying to look at the data in the United States. They're looking at the world central banks and their currencies. So I think they're caught between a rock and a hard place right now. So it's really about, you know, the data that's coming out. Some days housing numbers look great. GDP numbers look, you know, kind of soft. Unemployment number was below the consensus last month. So what data are you really pinning this on based upon if they're going to raise interest rates going forward?
So what do you do until then? Do you just stay in cash until you get the result and let the market consolidate for a couple days and think about getting in the end of June? Or?
Well, right now, as long as the 1945 level on the S&P futures don't get violated on a closing basis, we're still in a significant uptrend here. That's been since March 11th of 2016. So again, until that number gets violated, we're in an uptrend here. So I think that any pullbacks here could be bought in selective names that pretty much had solid earnings and then, you know, pretty great fundamentals and great technicals on the charts.
Okay. All right. Thank you very much.
Thank you very much.
For Channels TV in New York, I'm Jill Malandrino.
Joe Malandrino with Stephen Kaleja. Talk about the U.S. FOMC market, but let's talk a little bit about the continent's market since the year started. Morocco's stock market has been leading the rest of Africa since the new year started with 10.4% index return. This is according to data pulled from Bloomberg and Lagos-based United Capital. The Moroccan stock market, however, suffered a 3.0% decline last week. Coming in the second place is the Tunisian stock exchange with 9.5% index return, while Egypt, despite its political problems and terror-related activities, takes the third place of best-performing African equities with 7.5% index gain. The GSE group in South Africa, returns since 2016 started, was a positive 6.7%. On the flip side, the Ghana Stock Exchange posted the worst index reading of a negative 11.1%. Zimbabwe falls 9.1%, while Mauritius stock market was down 3.4% since the new year started. So we'll talk about the first year of President Buhari's administration. A survey on the street says 41% gave their approval, 37% says no, while 19% says they're undecided. On average, the president has gotten about 64% job approval rating since the first day he took office. We'll talk about that from Dr. Abiodun Adedekwe live here in the studio after the break.